Here the Croatian National Bank has the marginalized requirement for external borrowing. It has increased the risk weight for unhedged borrowing in foreign currency. But also supervisor cooperation is extremely important. First, between domestic and foreign supervisors. I said earlier that in emerging Europe, including Croatia, there is a very high share of foreign bank ownership. Now, this requires very close cooperation between home and foreign supervisors for a number of reasons, but also because although this lending of the foreign banks is very important for the domestic economy, given the relative size, it might be a relatively small part of the portfolio of the foreign banks. The result is that for the foreign supervisor, this may not be very important because it's a small part of the portfolio, but for the home supervisor, it's really important. So the cooperation is extremely important on this issue. But also within border supervision, between bank and non-bank financial sector supervisors. Although, as you saw earlier, the non-bank financial sector is still at an early stage of development in emerging Europe, it is growing fast. And quite often, this is in response to central bank measures to slow down credit growth in the banking sector. And you know very well that this is very much the case here in Croatia. Quite often, the banks, in order to avoid central bank measures, they extend lending through leasing or other activities. So cooperation between the two supervisors is extremely important. And finally, increasing risk disclosures. People often don't understand the risks involved. They don't understand that a loan in foreign currency is subject to exchange rate risk. A loan with variable interest rates, it's subject to interest rate risk. And as we saw during the US subprime mortgage market, when interest rates increased, servicing this debt became much, much heavier, and this is what started the crisis. And again, fostering flexibility and financial development will help eventually emerging Europe turn these imbalances around. There is no question that these imbalances will turn around. The question is when and how. And fostering flexible labor markets and capital markets. In the labor markets, in terms of not only hiring, firing, but hours, skills required by the labor markets, wage bargaining systems in some cases. Diverse financial systems, developing the financial systems outside the banking sector will also help. And this is much more important for economies with rigid exchange rates because monetary policy does not have a lot of influence in this case. And finally, to make sure that financial sector development continues in emerging Europe, it is important to improve financial infrastructure in terms of creditor rights, corporate governance, developing financial markets, and primarily a government securities market, and addressing distortions that may be obstacles to the development of the financial sector. And the last chapter looks actually at one of the indicators of the foundations of financial sector development, and this is institutional quality, defined as property rights, corruption, quality of bureaucracy, rule of law, which is one of the determinants of financial sector development. And what we see, which is not a surprise, advanced Europe is ahead, new EU member countries follow, and non-EU member emerging economies are behind. What we see in practice is that these kind of reforms have very much moved along with the EU harmonization process. However, what we see in practice is that many, quite often, countries, the new EU member countries and the candidates, including Croatia, they treat these EU standards and rules as targets, while these are actually minimum standards. They are in the right direction, but they are minimum standards, which all the existing EU member countries meet. So in order to move ahead, in order to convert faster, in order to be competitive within the EU, it is important to go way beyond these minimum standards set by the EU. This basically summarizes the main messages of our report. Our next report will come up in April. It will focus again on a specific topic. We don't know yet which topic. It will depend on the development in the next few weeks, I guess. And with this, I would like to open the floor to any questions you may have.
Some water.
And I would like to ask some questions to Mr. Vamvakidis. First question is, how would you comment the saying of Mr. Shoni and Mr. Chichinshain about it, that it is not as important the height of external debt rather than the structure of the foreign debt in Croatia. Now it is about 85% of GDP. they say that, according to them, that it is not as important as the structure of itself. This is the first question. And I would like to ask your comment about the asset securitization in Croatia. The asset securitization law is set to be brought up in a few months. How would you comment it regarding your lecture about asset securitization and mortgage-backed bonds in the USA and its importance on the USA and Europe? And about the restrictions and the restraints of HNB, Narodna Banka, the restraints of a 12% growth of credit limits regarding the expansion of leasing and some other non-bank institutions. Because we have direct fundings of mother companies, direct from Italy, direct from Germany, that are not under influence of Croatian National Bank. Thank you.
I mean, I haven't seen their statement, but they do have a point. What we saw in the chart is gross external debt. If you look at net external debt, which has to adjust for assets, this look less scary. I mean, the last numbers I remember for Croatia, gross external debt was 85%, net external debt was something like 49%. It's not small, but it looks better. And the fact that it's smaller justify less concerns, but still we should be concerned because there are some mismatches. It doesn't mean that the ones that hold the liabilities also hold the assets. Still, the high share of assets is a buffer. And in a way, this is also what differentiates today East Europe with the East Asia back in the 90s. But still, these are high levels of debt, even in net terms. And if we were to compare today's Europe with today's East Asia, we see that both are growing very fast. East Asia actually is growing faster, but East Asia is having current account surpluses, while East Europe has very high current account deficits. So I agree, net debt numbers look better, but still we should be concerned. These are still external imbalances. Now, your last question was about the CMB measure. What was the second question?
Asset securitization.
Okay, securitization. Definitely, the issue of securitization, it has become very controversial. As financial innovation, it has a number of advantages. It helps diversify risk. It helps banks to find new financing sources. It helps an efficient distribution of risk. People who are willing to take it, they can buy it. But there is no doubt that the way this worked in practice, it was not the most efficient way. And risk ended up being at the hands of people who were not aware, or investors who were not aware they were holding this risk. And indirectly, financial institutions were exposed without being aware of it, and to a significant extent. So definitely, although securitization is a positive development, the way this is used by banks will have to be reconsidered, and these gaps have to be closed. I haven't followed the recent developments in Croatia. I know that securitization was not allowed until very recently. But if this is an issue that they are considering now, definitely they should take into account any changes in the use of securitization in the rest of Europe to make sure that this doesn't happen here. Part of the reason that the crisis has not affected emerging Europe is that in this financial innovation, emerging Europe was behind, and it actually was good that it was behind. On the CNB measures, we have fully agreed with the need for measures by the central bank. The central bank focuses on exchange rate stability. It cannot increase interest rates. Anyway, the relevant interest rate is the euro area interest rate. And we fully agree with the consensus of the CNB regarding the external imbalances. Usually the IMF expresses preferences on prudential measures, and we have always said that these measures, although we have supported them, they only have a supportive role and temporary effect. They buy you time for other policies to work. And the Central Bank of Croatia has pointed this many times, that eventually the banks find ways around it. And this is what has happened not only in Croatia but in other countries too.